But one stock which is reacting very positively to its numbers, PNB Housing. Look at the stock right now. It's holding up just so smartly in trade, higher by nearly about 7% on PNB Housing futures, looking very smart indeed. Of course, they've posted a very healthy set of numbers for the fourth quarter. They've raised the retail growth guidance as well. And of course, the kind of synergies that emerge from the affordable housing segment, robust asset quality trend, whether that will sustain a lot. A lot of questions for Girish Kousgi, so let's welcome him on board, MD and CEO at PNB Housing Finance, joining in on the show right now. Mr. Kousgi, great to have you on the show and excellent set of numbers. Congratulations once again. And you've upped your retail loan growth guidance to about 18%. At a time when other NBFCs are actually finding it very hard to get loan growth, what gives you this kind of confidence to up your guidance?
Good morning. I think we had a great year and great quarter. If you look at PNB Housing in last 3 years, it's been a complete transformation. We had guided growth of 17%. We ended up with 18.2%. There was a lot of intermittent challenges, in FY25. In spite of all those challenges, we were able to post a growth of 18.2% on retail. If those challenges were not there, the growth would have been much more than what we have shown. I think the demand is quite robust. PMAY inter-subsidy scheme is actually pushing up demand. Across geography, demand is very good. And execution at PNB Housing is impeccable. I think that is the reason why we were able to put up a good show on all the parameters, including growth.
Much of your disbursement in the quarter gone by for the year gone by was to salaried class and non-salaried class. And what I'm trying to understand is that is the non-salaried class growing for you, or it is the salaried classes where you are growing your book?
We are growing on both salaried and non-salaried. By design, we had increased our focus on non-salaried, so that has now inched up. And salaried also, within salaried also, in certain segments like affordable and emerging, it is growing very, very fast. So for us, all the profiles, salaried, SEP and ACNP, all three are growing.
Kousgi, your affordable housing segment, the AUM target for FY26 is about 9,500 crore rupees. Earlier, you had given a target of 15,000 crore rupees by FY27. Are you sticking with it, or are you making any changes to that guidance?
Oh, not at all. We are sticking to it. We started affordable in Jan 2023. In about 27 months, we have crossed a book of 5,000 crores against guidance of 5,000 crores. Now the book is 5,070 crores. So by FY26, the book will go to 9,500 crores, and by FY27, the book will cross 15,000 crores. We stick to our guidance. And overall, we had said retail book is going to be 1 lakh crore. Within 1 lakh, affordable 15,000, emerging would be about 25,000, and the balance 60,000 would be from prime.
There is a write back or a recovery in FY25 of about 300 crores, which means the loan which you'd written off, you got that back. In FY26 also, should we expect similar kind of a recovery from your write back account?
Absolutely. In FY26 also, there will be good amount of write back, and to that extent, our credit cost will be negative in FY26 as well.
Why are you confident that there could be write back? I mean, I'm just trying to understand if you've written off something. I'm just making this question slightly more descriptive for the benefit of our viewers. There is an RBI guideline which has to be followed that if a borrower does not pay, it has to be written off. But if you start recovering from that borrower, then you write it back. So are you confident that what had become bad loan, you would be able to recover the property value from them, or bad accounts are becoming good accounts?
No, absolutely. In fact, no customer is bad. Only situational defaults would be on the rise. Maybe 0.5% could be intentional issue, and therefore we are very, very confident. We've been trying to collect from recovery pool not just in FY25, even in FY24, and we have a total pool of about 1,400 crores. So we expect similar kind of recovery in FY26 as well, and that would help us on profitability and lower credit cost, actually negative credit cost.
All right, Girish, also help us understand that what has impacted your ROA, because we see that there has been a bit of an improvement here. Help us understand that what actually drove this.
Actually, if you look at PNB Housing 3 years back, we were struggling to grow. So on retail, especially last to last year, we grew by 10%. Last year was 14.1, and FY25 we have grown by 18.2%. So I think growth is very clearly back. Not just growth, I think within retail we have started affordable, we started emerging this year. We have started lab vertical. So this would obviously ensure that the margins are going to be higher. Number one. Number two, we have been bringing down our cost of funds over the last 6 to 7 quarters, and this would continue in future as well. And number three, we have a write-off pool which we are recovering that directly gets added to profitability because of growth, because of good management on a liability, and also good recovery. We will be able to show better profitability, and this would continue.
Two things that I wanted to talk about, Mr. Kousgi. A, that there were reports highlighting stress in your small affordable segment. Tell me a little bit more about what the situation is.
No, we have not seen stress in any segment, including affordable. Today, our affordable book is 5,070 crores. Our GNPA is 0.21%. So absolutely, there is no stress at all. And we are doing pretty well. If you look at our GNPA, now it is 1.08%, which was 1.19 last quarter. Last year was 1.5%. 3 years back, it was 8.13%.
The state-related issues, because we understand that there were registration issues in Karnataka, which also impacted your numbers. Telangana has now come out with a bill to prevent coercive recovery by money lending entities. Tell me how all of this impacts your business.
I think to a certain extent in FY25, there was an impact because of certain procedural changes in the registration. I think the one which you mentioned about Andhra or Telangana was more to do with small ticket, especially MFI, not on the mortgage side. So in spite of all those challenges, we have grown by 18.2. So I'm hopefully all of those things are now resolved. So FY26 is going to be a great year for the industry as well as PNB housing.
Understand, final question, that if the economy improves, which is what it is, FY26 will be better than FY27, both in absolute terms and in relative terms. Are we in for a positive surprise to your 18 to 20% guidance? Is that a conservative guidance, or that accounts for a uptick in the second half?
See, what we are trying to do is we are trying to moderate our growth because we are changing segments. Our focus is more now on affordable and emerging compared to prime. So FY26 we had guided 17. It was a surprise that we crossed 18. Now it is 18.2%. So if the economy picks up, the growth could be better.
All right, Girish, with this, we let you go on that. Thank you so much for taking the time out and speaking with us. So that was the management of PNB Housing Finance. After a great set of numbers, the stock is holding on to the gains of almost 9% as we speak right now. But with this, viewers, it's once again time to slip into a very short break.